Hey, this is Terry Hale, commercial real estate trainer with Wealth by Design podcast. I'm really excited to share this segment with you. It's a lot of buzz in the air, a lot of talk about, is it a seller's market, is it a buyer's market, and how things are actually transpiring in the current financial times. So let me go ahead and enlighten you. Of course, my crystal ball's in the shop, so I don't have the exact answer to the upcoming so-called recession that people are talking about. But I can assure you this, the way we're doing business with commercial real estate, all the different types of product that we work with, as far as multifamily, we're dealing with both larger and smaller, self-storage facilities, big box warehouse. We're even dealing with land. We're even dealing with some techniques on tying up land, doing deferment of payments, where we actually put down a small deposit. We defer the payments to the back end of the loan, typically 3-5 year loans, and then rezone the actual dirt and create value. All these different types of product, as I refer to it as, meaning property types, there's always going to be a need for a seller to actually sell. There's going to be motivated sellers that are out there. It comes down to the story on the reason that they're selling. Look, you got two sides of a piece of paper. You got a liability and you have an asset. The average person that's out there looking on these websites like LoopNet and Crexy and CityFeet, or using some other platforms like Reonomy to get to sellers direct. You know, they're all using the same techniques that are out there. They're utilizing a capitalization rate. They're looking for different properties that are out there that have some kind of lift, some value add. We're doing something entirely different. The way we're pursuing properties is we're honing in back to the human element of business, the aspect of, hey, is this a seller that has to sell or just wants to sell, right? And so we're never dealing with that actual asset class. We're never dealing with those properties that are already considered at their highest and best use. We're looking at property that is suffering. There's a situation, whether it's the seller situation or the property situation, lack of management, health issues, partners feuding, or just people that are out of gas. They just don't want to do the business any longer. And we find that there's a lot more people out there than one would imagine. A lot of people are just out of gas. They just want to retire. They want the path of least resistance. So we hone in on that. The way we find these projects is pretty amazing. We're finding these and locating these properties for these motivated sellers. We're before the 8 ball. We're finding these deals before brokers start doing the door knocking, asking if they can list it to sell it. Look, we're not brokers. We don't hold license to be a broker, to work for commission. And if you're a broker, great. Nothing wrong with that, but you definitely should be on the investing side of the business as well. Recently I just had a talk with a gentleman who's an appraiser. He's been appraising commercial property for the latter part of 20 years, writing reports, talking about the as-is value, talking about the future value. Look, he sees these properties being sold, right? But he's not on the investing side because he has a job and he's working the appraisal business. So, now obviously he's into investing and moving forward and looking to build some serious wealth. So regardless of where you're at, regardless if you have a degree on the wall or if you're still paying off that degree, or if you are just high school graduate, or even if you've never even graduated from high school, it doesn't matter. It's an equal playing field on where we're at in this business, that I have invented these strategies and techniques. I've honed the skill set. I've taken strategies and techniques that I've seen other people use in other business models, and I've honed those into dealing with investing. The way that I do this business is we're locating motivated sellers that have to sell. Once we understand the story behind the reasons that they're selling, then we back into the numbers, because I always say the numbers don't lie. You have to trust your judgment. And what we do is we just justify those numbers. We just look at what the gross amount that's coming in, and then we utilize typically a 30%, because we want to be conservative. So we use a 30% expense ratio that kicks out our actual net income. And the simple formula is the NOI divided by the purchase price, which equals that capitalization rate. And a cap rate is nothing more than just a measuring stick anyway. It's what brokers and sellers and even appraisers, as I mentioned earlier, appraisers use this measuring stick to determine the true value of the property. And some people get this backwards, but the lower the cap is going to be the better for the seller, and the higher the cap, the better for the buyer. In this current day, where we're at right now, we're looking at current occupancy sitting at an average of 85%, and your average cap rate sits at right around 6 to 7% on a cap. Can you get a cap rate down as low as 3%? Sure. Look, something's worth what someone's willing to pay, but we're not buying anywhere near a 3 cap, I can assure you that. You know, the old school technique of buying commercial real estate, this is crazy, right? The average person, it would take 3 to 5 years for them to actually realize any true cash flow. And here's why, because they're putting down 20, 30, sometimes even up to 50% cash down. And when they put that amount of cash down, they have all their expenses. And when you take out all those expenses, when people are overpaying for the property, it's gonna take that amount of time to catch up. People buy houses, your regular house, right? People buy houses for mainly one reason, and that is appreciation. So over time, you capitalize on that appreciation factor. Commercial real estate is different than the house buying business. So if you're out there and you're flipping houses, right? If you're a house flipper, where you're investing, you're repositioning, you're doing the rehab, right? You're following that technique. You can add commercial to your everyday techniques of investing. And even if you just did one deal every 6 months, you could hit one out of the park. I mean, talking big money, 6 figures, and even sometimes 7-figure plays, depending on the size of the projects that you're dealing with. And I know what you're thinking right now, right? You're saying, well, Terry, that's great, you know, you're in that position to do so. You know, you have 25 years experience and you have, you know, perfect credit and you know, you have capital, so you can go do it, but the average person maybe can't. And that's a mindset. That's just a story, right? So just change the story. Look, I use this technique and I've been saying this for a long time. Hire the professionals and let them do what they do best, and you focus on what you do best. So the fastest way to get to the level of success is just to delegate, find the people. Meaning if you don't have the capital, find somebody who's got capital. You don't have perfect credit, or maybe you have no credit at all. Maybe your FICO score just totally sucks. Maybe it's a 400 or 500, or you had a foreclosure, or a car repossessed, or bankruptcy, right? Well, so what? Then find a seller that's motivated, pitch the seller about seller financing, do a non-recourse structure where you're not personally guaranteeing anything, and close the deal in an entity like an LLC, which costs hundreds of dollars to form that business entity. Close an entity. If you have to sign on behalf of the entity. And you're never gonna put up your personal credit, you're never gonna show tax returns, you're not gonna be showing your bank account statement, so all that is totally irrelevant. See how we just changed the story? We changed the story. And you know, a lot of times people will focus on getting, you know, a deal done and dealing with a smaller project. And some people are talking about doing bigger deals, doing huge deals, doing syndication. You know, that's a whole different animal. That's a different ball of wax. When you're dealing with syndication, you're dealing with a Security and Exchange Commission attorney, you're dealing with different type of funds like 501c3s. You know, at that point in time, you have exposure, you have to undergo the expense to actually get that whole fund together, and then you have to go pitch it. And when you're pitching, you can pitch to either accredited or non-accredited investors, and you have to follow by those rules. And obviously you have a lot of eyes on you and a lot of exposure, as I just mentioned. So dealing with mom and pop, dealing with these individual projects, dealing with the smaller projects, the bread and butter, right around $1 million to $2 million, if you're buying it at 50% occupancy, simple math, grab me here. You're buying it at 50% occupancy at $1 million, right? And you go ahead and you bring it up to say 90%. That property is going to be worth double, and here's why. We're buying aggressive. Remember, it's not like we're just buying it at $1 million. We're buying it utilizing that capitalization rate that I mentioned earlier. So we're going to buy at like a 9 or a 10 cap, but when we sell it, after we fill the vacancy, raise the rents, add the profit centers, do automation, modernization, lowering our expenses, it all adds to the bottom line, right? And then it's going to take a little bit of time to do that. You get the monthly cash flow while the property is actually appreciating. You capitalize on the cash flow, as I just mentioned, plus the depreciation that you get as well, the write-off for your business. And it's just more money in your pocket. It's just smart business, right? Commercial real estate is doing the business right. It's smart business. There's more millionaires and multimillionaires made from commercial real estate than any other platform. And I know we got a lot of hype going on around, cryptocurrency, day trading, and a lot of other platforms, but commercial real estate is real. It's not this fictitious up and down, like the stock market or crypto, because there's really not a way to gauge that. It could tank any day, right? But commercial real estate is not influenced in that nature. When interest rates go up like they're currently going up, the market's affected at like 3 to 5%. That's nothing. That's nothing. Market average at 85%, you get that property up to 90, 95, even 100% occupancy. If you're dealing with, less than a couple hundred units on a self-storage, we're dealing with around 20 units on a multifamily, or with pad sites, you're dealing with less than 50 pad sites for mobile home park, or same for RV, or big box warehouse, you're dealing with anything around 12 big box or less. These properties, they're easily managed. You can easily fill them with the right marketing efforts. The expense to fill them is minimal, and you can have operations minimal and maximize your returns, all right? So if you're following what I'm saying here, then what you need to know are the 5 things before you want to know anything else. If you're intrigued and you want to get going with this, come talk to me. I do work with preferred partners. I work with people on a limited basis and talking to them about opportunity for partnership. I don't always have spots available because I mentor quality, not quantity. So I have to work with someone that obviously we speak the same language, and you understand there is a learning curve, so that takes time to get you there. But the wonderful thing is I do have operations here in my office in Malibu, California, and I've been at this for over 25 years. And I have a lot of successful clients that we do a lot of great business with. And I'm hyperactive, super active. I actually have people in my offices right now that are smiling and dialing, and just got news on another large self-storage deal in Middle America that we're gonna get seller financing on at a strike price about $4 million and a 10 cap buy. So wonderful things are happening. The 5 things you wanna know before you wanna know anything else, so you're not gonna waste your time.